What's up, everyone? I hope you're having a good night. We're going to be talking about SoFi Technologies, currently trading hands at $9.71. This is not financial advice. Trade and invest at your own risk. But for anyone who's seen my last video on SoFi, you've seen that I just uploaded part one. I didn't have time to get the rest of the video out, but I got out what I felt was most important. A warning that I foreseen that we would very possibly see a low of $10 on SoFi. Now, one thing I didn't mention in the video because it was getting late and I just didn't mention it, but when we see a level like $10, unfortunately we have so many people out there that don't have the foresight to see that this is coming. When we get to that level, what we have is a lot of people start panicking and they start panic selling, and the fact is they panic sell at a loss. And the fact is, we had well, I'll go over it in a second, but we had a higher volume today than we did yesterday. So we have more people coming on today just to freak out and panic sell at a loss, instead of saying, the price has moved down, maybe I should consider averaging down. They're panic selling. And the fact is, a lot of them panic sold at a loss on SoFi. So that's where we're at now. So the big question is, what now? What comes next? And that is the question, right? So as I warned, we're in a very brutal, volatile market. So as you can see, the price went down today 4.29% and then 1.12% after hours. And it appeared it somewhat stabilized. Now, at this point in this market, if you haven't got in, or maybe you're looking to average down, maybe you want to go ahead and wait for the $9 range. That's totally up to you. How low could it get? That's the question. And that's something I don't quite have an answer for. It's just something we're going to have to watch every day, see how much panic ensues. Obviously, the lower it goes, the lower the RSI goes, as obviously it moves with the price, right? So, that's just something we're going to have to keep an eye on. And obviously, high volume doesn't necessarily mean high price. Again, the volume was higher today. People came on just to freak out and panic sell. So, you're just going to have to keep an eye on that price and how much people are freaking out, So, I just wouldn't be super fast to jump in or average down. Keep an eye on it. There's no need to be in a big hurry or use dollar cost averaging at this point. So let's talk about what I foresee as a worst case scenario for SoFi. And again, this is not financial advice. Trade and invest at your own risk. But a lot of people have wondered, why haven't bears exited their position? Well, now you can see. Again, we're in a very volatile, brutal market. So it's going to take a while to reach that $20 mark. So they're wanting, in my opinion, to beat the stock down to that $5 range. And in my opinion, it's likely they will. At that point, it will fairly quickly get back up to $10. And once they exit their short positions, it's a quick double. Now, I want you to do what you think is best for your money. If you want to have strike days and strike prices, maybe you want to buy at 9 and then 8, 7. Maybe you think it's crazy. I'm even thinking those prices. But all I can tell you is my plan. I'm not going to average down at this point until I see $5, period. So you do what is comfortable for you. Maybe you want to average down at $9. Maybe you're going to get put options as a hedge against your risk. There's a lot of different ways to do this, but I just want to throw out there what I foresee as the worst at this point, as the worst case possible scenario as far as the low right now. As I always say, it's better to be prepared than surprised, because the fact is, and like I said, we'll look at it, but the volume was around 6 million more people who just came on simply to panic, freak out, and panic sell. And the worst thing you can ever do is panic sell, because then you've lost the money. you have less capital. So when it does get low, I mean, who knows, how low it's going to go in your case, right? So you're going to have less to buy your shares back, to make your money back. So that's the best thing I can tell you, is that panic selling is the worst thing and here you can see that 6 million people more than yesterday came on today for the sole purpose of selling their shares, panic selling. And the fact is, the lows we're at now, it's a clear indication that they are panic selling at a loss. And I'm not knocking anyone. You have to do what you have to do for your family. But is it a smart move in terms of an investing strategy? Absolutely not. So, that's just the fact of the matter. So let's keep a close eye on it. Let's see where the price goes next. And based on the valuation, he goes on to say he will consider a stock a buy if the indicators change and the investor sentiment that leans to the funds being rotated back to the fintech sector. And more information, let's just keep it moving. Now I just wanted to give you an overview of what his opinion is, posted February 14th, 2022. He talks about the bank charter, allowing SoFi to utilize deposits to fund loans, creating better margins, opening up new revenue streams through its Galileo platform, raising guidance with the federal student loan moratorium still intact. It's on track to be lifted in Q2, which will bring a large revenue stream back online. And he basically just thinks it will be a missed opportunity for those who don't invest. Now we're going to talk about the shares. As of January 31st, 2022, 95.4 million shares of SoFi are sold short. Of course, that has since changed. And as I said, I meant to get this video out sooner. That, of course, has since changed. But I'm going to keep it moving. There's just a lot to cover. Obviously, the shares sold short have went up, but there's a lot to cover here. So let's just keep it moving. I've got all this prepared to get this video out, and I have like I said, a lot of other stocks to focus on, and I'm looking to change the way I do videos. So I'm restructuring everything. So I'm not going to be so focused on every little detail. So anyhow, that correlated to 16.9% of the float being shorted. Shares of SoFi seem to have found a bottom. I think that's crazy. He thought that. Obviously, I didn't think that. He wondered why short sellers are not exiting their position. Again, I think that's crazy in this market. Obviously, I didn't think that. And obviously, you can see why short sellers didn't exit their position in this market. It's just insane. That's what I always say. You got to be careful what you read out there. It's like these people don't realize the market we are in. Anyhow, he goes on to say how much SoFi has built. Again, if you want to read over every detail, take screenshots. There's a lot to cover, so I'm going to keep it moving. Now, he goes on to say SoFi is to report earnings on March 1st, 2022, 2 weeks after the Super Bowl held at SoFi Stadium. He's shocked that shares of SoFi have dropped to the 1250 range, which is shocking to me that he's shocked with the recent approval of the bank charter. Again, look at the market we're in. Come on. But anyways, I'm going to try to sum this up. Virtual banking system operated in the cloud. SoFi is the bank of the tomorrow. It will be difficult for other banks to compete, as SoFi's overhead and expenses are drastically reduced due to a non-existent physical footprint. Obviously, SoFi shares have plunged. He says he wouldn't want to hold shares short going into earnings. So, with that being said, again, look at the market we're in. I told you what I think. So let's keep it moving. So for those who don't know, SoFi is now officially a bank. So let's keep it moving. Now here he talks about how obtaining the bank charter will benefit SoFi. So again, there's a lot of great benefits. So if you want to read that further, we have a lot to cover. Galileo still has and he is banking on SoFi to unlock it. So let's focus on the most important parts. At the end of Q3, there were 89 million Galileo accounts that SoFi is now collecting transaction fees from. In Q3, SoFi signed 13 new Galileo clients, driving their 12.66 quarter-on-quarter and 80% year-on-year account growth. SoFi now has the potential to unlock the full potential of the Galileo technology platform. 89 million accounts, largest neobanks as customers, so very good growth potential. Now here's some significant 2022 catalysts. Again, I'm trying to keep this video like under an hour, so if I'm trying to stick to the most important parts here. So again, I'm not going to read over every single thing, but I do want to highlight them. I think they're important. If you want to check them out, screenshot, read them, that's great. If not, I'll be highlighting what I think is the most important right now. Now, here it's highlighted, why would you continue to bet against SoFi considering the future catalyst, year-on-year growth. So just take a look at that projected growth rate. Now, we're going to highlight the most important parts here. SoFi had 2.94 million members at the close of Q3. Championship game held at SoFi Stadium. Super Bowl was held there. And SoFi raised its 2021 guidance, expected to break 1 billion and deliver 28 million in adjusted EBITDA. So let's keep it moving. Now, a portion of SoFi's lending business is constructed from refinancing student loans. The loan financing decreased by 50% as refinancing disappeared due to payments not being enforced. In March 2020, a part of the CARES Act, President Biden extended the federal student loan moratorium until May 2022. If nothing changes, this revenue stream will be brought back online in early Q2 2022. I think we may have covered this. Now here he goes on to say the Super Bowl is a major catalyst for a short squeeze. So if you want to check that out, let's keep it moving. Either way, with 100 million plus viewers watching the Super Bowl, SoFi could attract hundreds of thousands or millions of new users with a viral commercial and lucrative new customer bonus. And the demand for Super Bowl tickets was the highest ever in Super Bowl history. And that was good since the Super Bowl is at SoFi Stadium. And his guess was that meme stock traders would target SoFi shares for potential short squeeze on Monday following the Super Bowl. Of course, Monday was President's Day, so I guess he didn't think of that. He was, referring to Tuesday, which was yesterday, February 22nd. Obviously, that didn't happen, and today, the shares really plummeted. So, nice try, but yeah, all right. So, according to Ortex, SoFi remains one of the most shorted stocks on Wall Street at the time, with a short interest of 17.53%. Obviously, it's higher now. Stocks with short interest really can soar, obviously, once buyers come in and force short sellers to buy the stock back to cover their position. So we'll be keeping an eye on that happening, obviously. So, if you want to do strike days, strike prices, again, I'm not trying to put fear or FUD. It's just in this market, how low will the stock go? We'll see. But, like I said, at this point, I'm not averaging down until I see $5. That's just me. Good long-term investment, but be prepared for a squeeze play. At this point, if it happens, it's not because of the Super Bowl. He says expect a lot of trading volume on February 14th. I'll just say this. If we do see a short squeeze, and let's just say it goes to $20, I'm out, and I'm buying back in around, $10. So I just wanted to throw that out there. But obviously the bank charter is a move in the right direction. So let's keep it moving. Now, posted on February 8th, 2022, He was talking about SoFi just reached under 3 million total users in Q3 21 and will pass the 3 million mark in March's Q4 2021 earnings report. Obviously, SoFi got the bank charter and no longer needs to act as a middleman through third-party banks for lending needs. And again, the Super Bowl played at SoFi Stadium helped drove a lot of attention and users for the company. He goes on to say SoFi is one of his favorite fintech companies since they went public via SPAC in 2021. And I'm just going to highlight the important parts for now. He says that he thinks SoFi will report strong Q4 2021 earnings, on March 1st, 2022. And he says all signs point to a strong quarter if the company maintains the same momentum from Q3 2021. So we'll be discussing a bit more about what we should expect on earnings. Now, obviously, getting rid of the middleman will help SoFi improve margins and pass along savings to its user base. And savings accounts with the bank charter approved, SoFi has a tremendous competitive advantage over the competition by being able to offer the best interest rates and convince people to move their funds away from low interest legacy banks. So SoFi will interrupt the legacy banking industry. Legacy banks make a fortune off of offering extremely low interest rates on customer deposits while loaning out funds at higher rates in order to profit from the difference. However, the rise of DeFi and digital online banks aims to disrupt the corrupt banking industry by offering consumers better yields with more user-friendly financial products. SoFi offers a vast array of financial products that beat the competition hands down in terms of loans, checking and savings, investing, crypto, ETFs. So, competitors like Bank of America and Wells Fargo cater to a much older demographic and have been slower to offer financial products aimed at younger adults. And then it goes on to talk about Ally Financial. So let's keep it moving. Now again, he expects, strong Q4 2021 earnings release on March 1st. So, he says it will send SoFi stock much higher. Again, I don't think he had the foresight or I guess the wit to think about what market we're in. That's all I can really say about that. Risk factors, growing pains, not profitable. Unlike some of its competitors. $3 billion in debt with only $533 million in cash on its balance sheet. May use convertible notes in the future to raise capital and dilute shareholders upon conversion to shares. Now, if SoFi experiences slower growth and the Super Bowl campaign doesn't add new members, then he expects investors will run to the exits. The shares traded a premium to its banking competitors, and obviously a poor Q4 2021 earnings report could send the stock below $10 in a hurry. Obviously, again, he wasn't thinking about the market we were in. We're already below $10, and we haven't even gone into earnings. So, I think we're going to be even lower than we are now by earnings. So, I hate to throw a number out there, but I wouldn't be surprised if we're down to $7.49 by earnings. But anyhow, so SoFi stock trades at a $10 billion market cap, far smaller than the big legacy banks like Bank of America, JP Morgan Chase, and Wells Fargo. And you have SoFi down there in the purple. We really have a lot riding on these Q4 2021 earnings here. Now at this time, he was saying it was the right time to buy SoFi stock. Obviously wrong, so. Now the lending and financial services revenue remains strong despite competition from other fintech companies, including Lending Club, Ally Financial, and Upstart. In Q3 2021, SoFi raised its guidance for Q4 2021 due to an acceleration of growth, yet SoFi stock is, at the time, down 50% from its previous highs and trades near pre-SPAC levels. Of course, now we're down below pre-SPAC levels, and as I've warned, because we broke down that below that $10 support level, and as I warned about the other day, I foresee that we could go to that $10 level. I foresee we could go a decent amount lower, so let's keep it moving. And there's just an overview of the chart just to show you at the time he was the stock was trading at $11.89, and that's where he was recommending it, which I can't say was, a bad thing, because at the time, at least I know when I was talking about considering a recommendation, it went up and you could have sold it for around, I believe around $13.50 and got back in. So, it's not necessarily, it all depends on how you handle it, buying in at 12 isn't necessarily bad if you sell it at $13.50 and buy back in. It's all in how you manage your portfolio and how you mitigate risk, and it's things we've talked about on former videos. Especially in this market, you have to be extremely careful in a market like this. So anyhow, let's keep it moving. Now, at the time, he was saying that SoFi was trading at a price to book value. It was 2.2 times, or at a price to book value of 2.2. That's slightly higher than most of its banking competitors. Sorry, I'm starting to get tired and kind of fade out here. And of course, he's saying from a valuation standpoint, he thinks SoFi shares would be more attractive around $8 below pre-SPAC levels. So again, $8. So keep in mind that we could be seeing quite a bit more downward momentum. But the thing is, I want you to understand, as the price gets lower, and if we do get to 9, 8, people may, and then the next thing you know, the price goes from 9 to 8 to 7 to 6 to $5 before there's strong support. Now again, that's what I told you, and I'm not trying to spread fear or FUD. And as always, not financial advice, trade and invest at your own risk. Good Lord, I'm fading fast. But just to reiterate, I won't be getting any more SoFi until the price is down to probably $5. So again, that's where I'm at. So that's why I was warning, long ago, please be careful. Remember the volatile market we're in. I warned everything's going to be going to crap. Back in November, I warned, I think we're going to see a horrible crash. By March, that prediction has come true. And, I warned about getting put options, if anything, to mitigate risk. So I've tried to do everything I can to cover people. But the fact is, even on YouTube, I just don't get a lot of feedback. And that's exactly why I said I'm restructuring my videos, because where I excel is making accurate predictions. So I'm wasting my time spending so much time on this stock and this stock and that stock. Again, all this information means absolutely nothing if you don't know how low the stock is going to go, where to, buy. And that's the thing. I've been, and please don't take this as a complaint or anything. What I'm saying, I've been spending so much time on doing these videos this way, and because people have asked if I would, and that's fine. But what I'm saying is, it's not allowed me to just focus on the most important things, and that's a list of stocks I recommend, where to buy, predicting the lows, and where to buy. And I can't tell you how many stocks, there's a follower I keep in touch with every day, and, he could tell you everything I've predicted it's all happened. And, that's what I want to do for everyone here, is make the predictions, get you in all these things cheap, and then we'll come back to it, and we'll get. So last but certainly not least, we need to talk about the expected EPS for Q4 2021, which is due on March 1st, 2022, and that is minus 16 cents. So if you look at Q3 2021's EPS, that was minus 5 cents. So obviously the EPS that is expected is going to be a disappointment. So again, that's the expected EPS, not a guaranteed EPS. That's just what's expected to be announced on March 1st, 2022 after hours for Q4 2021. So just keep that in mind. And again, that's why I said on my last SoFi video, I seen a possibility of $10 being the low, and unfortunately, because most people don't have the foresight to see that that's a good possibility of moving down to $10. We've seen that high volume today, and a lot of people came on just to freak out and sell their shares at a loss and panic sold. But again, that's why I said with us going in such a rough volatile market, and then us going into earnings and as you see that article I shared, that gentleman expects positive earnings. I tend to lean on the side of Zacks, Market Beat, and some others. The expected EPS of minus 16 cents. So that's obviously going to be a disappointment, and I wouldn't be surprised if the share price is around $7.50 by that time. And this is not financial advice. Trade and invest at your own risk. But again, that's why I said I'm not going to buy any more SoFi until the price is at $5. I just won't do it. But just keep that in mind. With disappointing earnings, the market we are in, it's something to keep in mind for you. So I guess that's all I have for you for now. I wish I had better news. Like I said, I am bullish on the long term on SoFi. There really is a lot more information to cover on SoFi, so I may have one more video coming out. But anyhow, thanks for watching. You'll have a great night, and I'll see you on the next one. Peace.